Hello again, people. Right, I'm back from my holidays, and it's Friday morning, and I just wanted to show you 3 trades that I'd taken this morning, and these are my charts as I took the trades. It's a couple of changes to my charts. I've just changed the sweet spot distances between the levels to 10. It seemed sensible, as I'm only scalping 5 or 6 pips, or sometimes a little more per trade. And I've changed the colour on the MACD as well. It was possibly confusing, really. There was unnecessary. I try and limit my charts to as little unwanted information as possible. Less is more, and more is definitely confusing in my opinion. So it's important really to remind myself when making these videos that it's easy to forget simple things that I've used and applied to my trading that become almost subconscious. And I think one of the most important things that occurred to me during this week's trading is that if you want to have a higher likelihood of profitable winning trade consistency, then let the breakout happen and then trade off the pullback. So basically they're stating their intent, and you notice I've got all these descending trend lines on here. It was long all the way today. No reason for that other than what the charts were telling me. I don't use fundamental analysis at all, and even some of the sort of so-called ex-professional traders didn't take the last trade today. They were telling themselves that they didn't want to go long, they only wanted to go short. Well, my analysis was basically you might have noticed I've got the pivots on there. That was a mistake. I was just trialing something, looking at someone else's system so they can actually go. My analysis was when the price was way down here, and I was sorry for all the mess on the chart, but when I was way down here, this was where the potential sellers were, as it were, or the main resistance level way up here. So when I'm down there, I do not want to be thinking of going short, really. That's it, simple as that. So I just stuck to my guns, pure price action analysis as always, using the indicators as always, and hey presto, that's it. So we can clearly see here both indicators triggered a long trade a little bit after my trade, but that candle there, and I've noticed this a lot, and I should make money on it as well, that even after a big candle like that, the expression to go long is still very strong. And this candle, I could have taken the trade as a result of that being green and that being green, and using the start of the next candle, because that was a good 7+ pips. What do we got there? Oops, missed it. Open 12,112 and high 119. So yeah, exactly 7 pips less the spread. So easy 5 pips there. But as it was, I got 5 pips using the break on the M1 on that instance. Again, these are massively, they've been around ever since charting has happened, paper charting, before electronics, as it were, the digital age. People just drew these lines on paper charts, and as you can see, it was the breakout candle there, beast of a candle. This had turned green and closed. This had turned green one step before, and that was my entry. Second one, another descending triangle, clear as the nose on your face, another bullish candle through it. That was my entry, and we've got both indicators non-repainting, remember, which is critical, telling me to enter. I wasn't really bothered about looking at, I was probably making a coffee or something here, but I could have traded that as well. But I got in on this 15-minute because apparently, according to the professional Billy TT on FX Factory, swears by this breakout. I prefer to use my indicators, so and candlestick analysis, as I say. So you've got your descending trend line, so I could have got in well early. Interesting to see also the MAs are back on the charts, just because I've picked up an old template. But notice how the price is coming off the MAs. It's again subconscious. I want to be trading as close to the MA as possible. When I'm a long way away, the price is likely to move less drastically, as you can see here. So that's it, guys. It's Groundhog Day, excuse me. 3 trades, 3 winners, average probably about 5.5 pips. One was 5, one was 5.5, and one was 6.5, I think. So trade like a machine. Use the indicators, believe in whatever indicators you choose, as I said before, CCI, stochastic, MACD or RSI, histograms. I like the colour changes, and the size of these bars, they add more information, if you like, than just a little squiggly line crossing over various lines. So find your indicators and then just pick the busy time of day. Don't be tempted to trade outside of the hours until you've really got profitability and consistency on your trading account, as it were, and that's it. 3 trades, 1's work, 2's a bonus, 3's a super bonus, and any more later today will be an absolute bonus. And also remember, guys, a lot of traders won't trade Mondays, they won't trade Wednesdays, they won't trade Fridays. They have all these blinking ideas. Use your indicators. That's all you need. All you need is your own knowledge of candlesticks, which are an indicator, of course, and your indicators of choice. Okay, have a great weekend, and thank you for watching again.